Hello everybody. After the announcement of global tariffs of the Trump administration, we saw a very sharp correction in asset classes around the world. Very hard hit were the US equities, the stock indices. When you're going through the news, we can read things like global bloodbath, 6.4 trillion wiped out from global economy in just 12 hours. Actually, the countries that is most hit is China, and the stock exchange in Hong Kong lost 13.2%. Well, that is a huge drop. But what about the other countries? Well, the most important market is the US market, right? The US equities market. So I've got it here. That's the YM futures contract, the Dow Jones chart. And we can nicely see here the drop, right? This is the Friday drop, and then the Monday drop. Well, there was a risk actually of to have a Black Monday crash type of 1987. What we actually see here, well, it recovered. But how bad is this, right? I mean, this is the daily chart. Well, we don't know if you don't look at the higher time frames. So let's have a look at those. Let's check the monthly chart. Well, the monthly chart looks different, right? It doesn't look that bad. I mean, we see a big monthly bar that is basically created by 2 daily bars. So it's a very quick reaction down. But I mean, looking at this, we just see this as a normal test of the 21 moving average, this line. This is a very healthy pullback in an overall very strong trend. This was the Corona sell-off in March 2020. This started with the Ukraine war. This was another pattern. This is an S1, this is an S1 followed by an S2 pattern. So this chart is clustered with patterns, bullish patterns. And we might see another bullish pattern coming out of this sell-off. Well, let's have a look at the quarterly chart to get a little bit of more of a broader perspective. So this is the quarterly chart, and here we can see how bullish this chart is, right? Price action is basically bouncing off the 8, the black moving average, and at times it comes down and tests the 21. These are healthy pullbacks. The Corona spike low, the Ukraine war, well, the lowest point came very close to the 21, and now we're touching the 21 moving average. Well, in terms of price action, what does it mean? It actually means that the bulls are stepping in. They're showing strength because the bears were not even able to break the 21 moving averages. The bulls were stepping back in to buy at the 21. There's no wick, right, that goes below. Let's have a look now quickly at the monthly chart. So the monthly chart, again, this is a test of the 21, and the stronger a moving average gets tested, well, the bigger the rebound can be. Same like here, that goes as a test. That was the entry signal, and as well here, these are tests, several tests that then led to this move higher. So if you look back, I mean, the US equities, they have performed very, very strongly, right? So a drop of that sort, well, it's quite bad, right? But we're basically back to where we have been a year ago. And so putting it into this perspective, it's not that bad. And it might be over, right? So how do we know? Well, we only know if we look at the charts and look at the patterns. We actually had a bearish pattern here. It's on the 15-minute chart, but we can see it better here on the 60-minute. That's a short pattern. And when a short pattern doesn't follow through, which is here, triggered an entry, no follow through to the downside. If it doesn't follow through, if it triggers the stop, well, that's a counter trend signal. And then the target becomes the start of the momentum move. So we could go up to the 42,000 as a technical reaction actually. So let's wait what happens if this high definitely gets broken higher. If you can make a new high, well, that would be the first sign of bullish strength and the first sign that this is actually the low of the market. If it cannot break higher, if it goes lower, well, then we should see bearish patterns coming in. So we can nicely gauge the dynamics of the markets by seeing the pattern. Who is stronger, the buyer or the seller? So let's just wait and see what happens here.